Welcome back, traders. It's Mike from Vant Trading with class number 6 of 20 of our beginner's day trading course, creating a mental edge, understanding heuristics. Okay, so this week is probably going to be the most draining week of learning. Okay, and this class today is probably going to be one of the more important, more intense classes. And I think it's also typically a class where the experienced traders really usually learn the most. Okay, and so buckle up. It's going to be, I think, a pretty good class, and let's dive right into this. First off, we're starting with the habit of the week, as we do every week. Week number 1, it was discipline. This week, it's mindfulness. And as we go through today's class, it's really, mindfulness, meditation really is going to hit home to a lot of you. And it's really you're going to see the importance of how important mindfulness is. And again, mindfulness, it's nothing more than a mental state achieved by focusing one's awareness on the present moment while calmly acknowledging and accepting one's thoughts and feelings. The key with mindfulness, and I know it's kind of funny, but it's showing up. Okay, just showing up and being. Okay, process everything in your environment to be aware. Really, if you can really have one word to describe mindfulness, it's being aware. Okay, just being aware of your surroundings, being in the present, okay, understanding and recognizing the gap that's between your thoughts. Okay, now ego is something that really has no place when you're talking about mindfulness. The ego will set traps. See, if you find somebody that has, you ever find somebody that has this really big ego? Well, what you got to understand about that person is that what they're doing is they're masking their fear of being insecure. That's all an ego is. Okay, so if you find somebody that has an ego, that's what they're doing. They're really, truly insecure. So, when you're talking about mindfulness, ego plays no part of it, okay? Paying attention on being, basically having a purpose, being present. You want to separate yourself from your thoughts and your feelings. Now, meditation really is going to be front and center. Okay, it is a tool that is going to help you with your mental blocks in trading. And trust me, you're going to have mental blocks in trading. A lot of you probably haven't traded yet. Okay, but for those of you that have traded, I think this is going to be really an interesting day because you're going to see some things that are going to pop up that you're going to say, you know what? Wow, that is me to the T. Okay, and so if you haven't traded, you're at a little bit of a disadvantage. But the key with that is, you're starting with that fresh slate. So you're looking to build that foundation. And like we said with this course, everything has been methodically put together so we can build that solid foundation. Now, meditation is going to be one of the main tools for really helping you get through these mental blocks. Meditation, there's many benefits of meditation. It reduces stress and anxiety. There's been studies to prove that it increases gray matter in the brain. So it helps you improve your focus, your attention, and your ability to work under stress. It helps you with processing information. As traders, we tend to have a lot of information that we have to process, right? And we have some really important decisions to make, so it helps with our decision-making process. And meditation is going to give you, remember I talked about you got to have that inner strength, you got to have that mental strength. Well, meditation is going to give you that, and it's going to give you a resilience and an emotional intelligence that you're going to see that you're going to need to be a successful trader. Now, Socrates said, learning is remembering, okay? You're going to get some new distinctions tonight. But a lot of it, every good coach really is a coach that gets you to do what you already know, okay? so the key is to get you to take action and to implement what you learn. It does no good just to, be theoretical with it. You got to implement it. So you're going to get a lot of distinctions tonight. The key is going to be implementation. Put it in process. Okay? And we're going to create some systems that are going to help you get through these mental blocks. Now, knowing what to do is really doing what you know. And that's really what Socrates meant. And that's what we're trying to get you to as we go forward as a coach. I had I had a mentor, my mentor, when I was trading up on Wall Street in New York. My mentor came to me and he was like, he was like, hey, have you read the book Think and Grow Rich? And I said, yeah, I read that book, of course. He says, well, read it again. I said, what do you mean read it again? He says, read it again. Repetition is the mother of all skill. So I went and read it again and read it over and over again. So, again, we're going to harp upon some things that you've heard before, but we're going to put it in maybe a little bit different context. Now, the key starting out is that you have to understand, meditation is really, we talked about this yesterday, it is the manual to how to use your brain. Right? Your brain, you have this complex brain, and there's been studies to show that we really have failed to understand how to truly tap in and utilize our brain to our maximum capacity. I mean, there's been some studies to show that, we're only using upwards to 40% of our brain's capacity. So, what happens is, you're making a lot of decisions, right? You're processing a lot of information in trading. So you really need to guard against what is going on in your mind, okay? You have to be a guardian. You have to be present and figure out what you are allowing into your mind and what you're not. Okay, you want to be constantly filling it up with fuel, and the fuel you want to fill it up with is positivity. Now, I'm not talking about, be positive thinking. The key is, you got to be positive, but you also got to look and you got to see, okay, what is it though I have to do? Okay, what do I need to work on? What's my weaknesses? I talked about it before. Make sure you have a good environment. Right? Make sure, some of the closest people to you in your inner circle unknowingly will actually provide poison that could seep into your mind and provide you with self-doubt. Okay, so the key is, and I'm not trying to be cruel or anything like that. A lot of times people are doing it subconsciously. So, guard your mind against the people in your inner circle. Guard your mind what you're allowing to process and to come into your mind. It's really important. And pull the weeds. Right? I don't want you to look at the garden and say there's no weeds, no weeds, no weeds. No, you want to go in there and pull those weeds out. Okay? Negativity is all around you. You need to make sure you got a clear conscience, clear mind. Now, the first thing we need to do when we're going to talk about some of these heuristics and these mental blocks and stuff, the first thing I want to talk about is the 6 human needs and how they relate to trading. Okay? Every person has 6 basic human needs. And the 6 human needs are certainty, variety, significance and importance, love and connection, growth and contribution. These are all basic needs, with the last 2 being spiritual needs. Okay? Now, everybody has a need for certainty. They have a need for assurances. I mean, and to understand that, you ever seen somebody that's watched a movie over and over and over again? Why do they do that? Because they're looking for that certainty of the emotion they're going to get from that movie. Now, at the same time, while you need certainty, you also need variety. Okay, and you gotta have, we need to spice things up. We need to change it up. And yes, some of these are competing. Now, one of the most important needs that people have is significance and importance. Everybody's looking for a level of importance. I don't care who you are. I had one person tell me one day that, Mike, I don't care about being important. Okay? That's my thing. I don't care. Well, guess what? Then that's your way of getting importance, because significance and importance is also being unique. Okay, so having, being unique, having the closest, that's significance and importance. Now we also need love and connection. Okay, we need to be a part of something. We want to feel like we're part of something bigger, right? That we're connected. And then you have growth. Okay, you're either moving, you're either growing or you're dying. Okay, how many people, and we talked about momentum yesterday, how many people, when they're in a groove and they've got a couple days under their belt and they're doing really well, how many people, really get excited about that momentum? How do you feel? When you feel like you're on a path to something. By the way, that's something you should be feeling now as we are in, to the 6th class, into the 2nd week of this course, right, of 20. So if you've done everything and you built this foundation, you sat through every course and you've gotten everything together, you've done all the lessons, then you need to get excited, because guess what? You have now what's momentum. You're growing, okay? And so that's important as well. And then there's contribution, right? Everybody has a need to really feel to give back and to contribute. Now, we all have these needs. The difference is some people value different needs more importantly than others. So the key is look at yourself and what do you value most? And how do you get it, right? How do you get that need? Well, hopefully in trading, you're not getting these emotional needs within your trading. So you really need to kind of sit down, evaluate these needs, and figure out where are you getting these emotional needs from. Because if you're getting it from trading, it could be a detriment and a big no. You definitely don't want to do that, right? So let's look how, emotions, getting these emotions from trading, how that can be a detriment. If you're trying to get certainty in trading, well, what happens is, think about it. If you want certainty, what are you going to do? If you find yourself cutting your gains short, like let's say you got in a trade today and all of a sudden, you're making money and you cut it short, right? And then you get in another trade. I had one trader come to me and said, Mike, man, I got into 4 trades today and I was 100%, man. I made money on each trade. Well, that's great. But then when you look at the trades, yeah, maybe you should have made money on 2 of them, right? The other 2, the others he shouldn't have made money on, because the problem was he had getting his need of certainty through trading. So he was trying to just take those quick profits, when really the 2 winners, he could have got another 10 points out of those 2 winners. So don't try to get your certainty through trading. Same thing with variety. Right? You don't need to have 5, 10 different strategies and constantly try changing it up. You might want to take a look at things, because if that's what you're doing, you may be trying to get this need of variety through trading. You don't want to be trading to get in an emotion. So important. And same thing, significance and importance. High success ratios. What did I tell you yesterday? A lot of the successful traders, what is the success ratio of their systems? Anywhere between 35 and 50%. Not very high, because successful traders know it's not about success rate, it's about expectancy. Okay, and we'll get into that when we're putting the plans together and all that stuff. It's about expectancy, it's not about success rate, right? You're not here to get that level of significance. You're not here to get it through trading. Love and connection. Do you fall in love with a thesis or a stock? Man, you go into Apple, right? I love Apple. I got all the, I got the headphones, I got the AirPods, I got the iPod, I got the iPad, I got the iPhone. Are you falling in love with your stocks and your thesis? Man, make sure, I hope you're not falling in love with your trading, okay? You can have a passion for trading, but make sure you're getting a connection somewhere else. And same thing with growth. Okay, don't you get into growth. If you're trying to get growth, you're gonna stay in trades too long, get out the wrong time, the whole thing. So make sure that you are getting these human needs outside of your business, outside of trading. Now, there's a book that I recommended. It's called Mindset. Okay, and basically it's one of the top books to read. I don't have it as your book today that this week to read, but it's one of the books that I highly recommend. So any trader that comes onto our floor must read this book. Okay, and it pretty much goes over there's two different mindsets out there. There's the fixed mindset and there's the growth mindset. Okay, and the key is with the fixed mindset, you have a mindset where you basically feel that things are fixed. You can't really, people are kind of ingrained into, some people are good, some people are bad, right? And you have this urgency to kind of prove yourself over and over again that you are, you can be successful, right? And it kind of prevents learning. Okay, the growth mindset, on the other hand, is a mindset, a belief that your basic qualities are things that you can cultivate through your efforts and your strategies and through the help of others. So a growth mindset opens you up to the point where you are on a journey to find out how to be successful, and you believe that anyone can be successful and that you can go out and make it happen and find the strategies to make it happen. To be a successful trader, you got to cultivate and have a growth mindset. Now, can you change your mindset? I've met a lot of closed off people. Okay, a lot of people that have what you would call so-called a fixed mindset. And the answer is yes, you can change your mindset. But to change your mindset, you really got to change your beliefs. Okay, you got to change your beliefs, because if you have a fixed mindset, your belief is a lot different than having a growth mindset, right? And so you got to really go in and change that. Yes, a belief from people basically are born. I can tell you this: traders are not born great traders. Okay. Any good, really successful trader you see has worked their butt off and experienced a lot more losses than successes. They've had a lot more failures than successes. That's what has made them a really great trader. So have that growth mindset. You got to change your beliefs. You also have to change your internal dialogue. We talked about this yesterday. Everybody has an internal dialogue within themselves. It's really the person that talks back to you constantly. Some people don't even realize it, right? And you have this dialogue. And so when you have a growth mindset, the dialogue is constantly searching for ways to get better, right? It's telling you that you can do it. In a fixed mindset, a lot of times the dialogue is negative, right? There's an urgency to prove yourself over and over again. You're really you get feelings of regret in that type of mindset. So you want to look at your internal dialogue and you want to change your beliefs. Now, the other issue that we really have to talk about and deal with is that most people have a low self-esteem and they don't even realize it. And again, the people that are out there boldly and they have this big ego and stuff, they're the people who have the most lowest self-esteem. Okay, having a high self-esteem is not negative. It's you're basically positive, but you're humble about oneself, no matter what your situation is, no matter what your performance. So, if you don't believe that you are worthwhile, and if you don't believe that you can do this and that you don't deserve it, then it's going to be very hard to be successful. Okay? You can't get self-esteem or any other emotion from trading. You have to come to your trading with a good, healthy self-esteem. Okay, you got to have confidence in yourself. You have to be secure in yourself. Okay, and having a high self-esteem, you got to be careful, right? You got to be careful of the self-critique that you do to yourself. And again, listen to the internal dialogue that you hear, that you communicate with every day. The stories that you tell yourself. Everybody tells themselves a story, okay? Your story, make sure it's a positive story. Everybody's telling themselves a story. You know, I mean, think about it. We've all seen different examples of, you know, twin sisters who grew up in the same environment, you know, and who have, you know, one goes out, makes something of themselves. The other person goes out, gets hooked on drugs, and winds up dying. Okay, what's the difference? You know, besides self-esteem, it's the internal dialogue. It's the story they're telling themselves. It's the beliefs, and it's the way they look at their situation. You know, one typically has that growth mindset, and one has that fixed mindset. So how do you start improving your self-esteem? Really easy, okay? First off, realize you're enough. You already won the game. Man, you are enough. You don't even realize it. You already won. You know, there was this race, you know, you were in there with all these other, you know, little sperm cells, and, you know, all of a sudden the gun went off, you shot out, right? And you were one of millions that went in and pierced that egg, and boom, you were given life. You formed life, right? So, you know, what are you fretting about, man? You already have this huge gift of being alive, okay? Realize that. Understand it. Be grateful, man. You are alive. You're breathing. Think how many people didn't wake up this morning, okay? The other thing is, it's that self-critic, right? A lot of us have had different challenges throughout our life. And, you know, we've had ups and we have downs, you know, we all haven't been saints. We've done things maybe we regret, right? The key is a lot of us are carrying around this huge bag of crap, right? That is weighing you down just from your past experiences. Well, first off, look, cut that bag, man. Leave it at the desk, leave it at the door, and kick it away. Okay, I give you permission. Drop that bag, get rid of that bag, forgive yourself. Man, it's okay. Let go of shit, right? Don't be dragging years and years and years of stuff around with you. Give it up, man. Just free yourself and realize, you know, past is the past. You're a good person, and you gotta have the belief that you are good. And remember what I said. The mind believes anything you tell it, okay? The mind believes whatever you tell it. So stop telling it bullshit stuff. Stop telling it a story that you suck and you can never do anything good and that you always fail and that you never, you know, finish anything. Why are you telling yourself that stuff? Why are you carrying that around? Because that your mind believes it. You know, it's a screwed up thing, man, but might as well, if it's going to believe anything, let it believe. Give it some good stuff to believe. So you got to have, you know, that good self-esteem. Now, let's really dig down in to trading psychology, okay? Because trading psychology, remember the success formula, okay? The success formula for being a successful trader, it's 90% mental, it's 10% skill, technical skill. So trading psychology is really, it's about understanding how our minds tend to work in controlling our emotions, okay? You know, look, you're not a robot, okay? We hear it all the time. I hear it all the time. You must not have emotions in trading. You can't trade without emotions. You gotta be a robot. Bullshit, okay? You are a human being, okay? So the way you process stuff, your CPU is your brain, okay? Your brain is your CPU. Everything must go through it. So the fact that you're human, the fact that you have, everything has to go through this brain, you know, what's part of that brain? Emotions, feelings, they're all representations that you can't get around and will always be there and will always be a part of the process. See, anchored emotions to past experiences are strong pulls in this process. Okay, so you have to understand that. Okay, you have to understand that you are not going to get rid of your emotions. Okay, we think, and how we treat our thoughts really say the most about our trading psychology. Thoughts are always with us, and we do not have much control over them. I hate to say it. Now, to gain some control of those thoughts, to really gain some organization to that, what skill are we going to learn? Meditation, right? Meditation is the tool. Okay, so typical trader that trades. I want to go through, now we went through a typical trader that's trying to learn how to trade and goes through the Holy Grail. I want to go through now a typical trader that sits down and trades. And I want to see if this is kind of familiar to any of you people or not. Okay, so what happens? A typical new trader sits down. They see a potential setup start to form in front of them. Okay, and what happens? They're filled with self-doubt. Is this really going to go up? Is it not? Right? So they're kind of nervous, but then they go ahead and they get the courage up and they hit the buy button. Man, they hit that button, and next thing you know, what happens? They're buying the stock. If they're lucky, if they haven't had their first area self-sabotage. Okay, because what happens for a lot of traders is they self-sabotage themselves through this process. Right? Well, how can you self-sabotage in the very beginning? We're trying to hit the button. Very easy. You know, you may see this stock that you're trying to buy. It's Apple, and it's currently trading at 120.10, right? 120.10 by 120. That's the spread, the bid and the ask, okay? Well, you put an order in for 119.50, okay? Well, let me ask you a question, okay? Assuming you're trying to buy that stock and it's going to go up. Couple things. One is, if it's currently bidding between 120 and 120.20, are you going to get hit at 119.50? No. What you're doing is self-sabotaging yourself. You're putting in an order they have no chance of really having grabbed because, oh, well, I tried to get in that trade, because you're afraid. You're self-sabotaging. Now, and even if the trade does get hit, hopefully you read the book, Reminiscence of a Stock Operator, right? The Jesse Livermore supposed book, right? Well, he talks about it. You know, I'm going to teach you a strategy to put orders in to feel out where is the market going. Well, if they drop down and hit that order, you don't want to be in long anyhow. Because guess what? Man, they're looking to drop that bid and they're looking to really sell that stock off anyhow. So you don't really, what you're doing is you're not trading. You're getting a point of self-sabotaging yourself. So the trader's sitting there, you're kind of nervous, right? You're kind of filled with self-doubt. I'm not sure. I think my strategy works. I think it doesn't work, and then you finally hit the button. Let's say you didn't self-sabotage, and all of a sudden you look at your P&L and it's live. You're in. Well, now all hell is breaking loose. Emotions are going up and down, man. And some traders, they're sitting there, right? And, typically, if you bought, there's a really 90% chance that you may be seeing red in your P&L right away. Because remember, we teach our traders not to have that P&L up, but no, new traders, 100% of them, they all have their P&L up, right? And so they see, man, damn, I bought and I'm $100 down already. Oh my God. So now the emotions start going in, right? And how do you know about these emotions? Well, what happens is you're breathing. You only realize your breathing starts getting shallow, right? Your focus when you're stressed starts getting narrow. Your muscles are tense. Some people are sitting there gripping their chair, right? You got discomfort is so bad as this trade is going on. It's palatable, man. It's like you are living or dying with every tick. And at some point, your mind, right, the stock's going up, it's going down, and let's say, hopefully it gets into the green, right? Your mind is just freaking out, and you just can't take it anymore, and it's urging you to get your profits. Get out, man. Come on, we're at green. And so what you do is you hit the button, you can't take it anymore, and you sell your stock, and you made your $50, right? You're green. You know what? You hit that sell button, and then all of a sudden, guess what? You breathe again. And you got this overwhelming sense of relief. Damn. Woo! Man, I'm a good trader. Look at that. Yes, I got a profit. Right? So you're all excited because you got a profit. You made 50 freaking bucks. And then you sit there and you're going around, you're looking for another trade because you're feeling good about yourself now, and all of a sudden, because you're really excited that you're not fucking stressed anymore, then you look and you see, oh my god, there's Apple at 122, right? And it's up another 2 points. So now, what happens? The self-dialogue kicks in, and you finally sitting there, you say, man, freak, I'm a horrible trick. What the hell did I get out for? What's wrong with me, right? And then self-doubt kicks in, and your dialogue's going in, and now you're just pissed, right? Well, what happened is you just been emotionally hijacked, okay? You lost a sizable profit. It was forfeited because you were mentally and emotionally hijacked. That's what happens with a lot of new traders, man. And if you ever experienced any of that, any of those feelings, that's what happened, right? So don't be emotionally hijacked. And we're going to go over how to structure yourself and how to structure your trading and how to have that not happen. Trust me, because it's not fun, okay? Trading, look, I'm not saying trading is a walk in the woods, right? I'm not saying that you're going to be able to, stop your trading, right? And stop your emotions from happening. I'm not saying that at all. But the point is that, I'm going to make sure that, you are able to manage your emotions, understand them, what they mean, and how to control a little bit of that process. See, there's a myth in trading. You cannot eliminate emotions in trading. You also can't control fear. Some of the best traders I know still get fearful putting on positions. Okay, and when I typically consult with traders and they come to me for advice on how to increase position size and how to get larger and still be profitable, it's one of the biggest issues that you got to deal with. You can't eliminate your emotions. You cannot control fear. Okay, so don't try to do it. Okay, now an important pillar for understanding beliefs, emotions, okay, there's one basic pillar that you need to know about. We are set up to avoid pain and to seek pleasure. Everything we do is to either avoid pain or to get pleasure, okay? And you need to understand this basic concept, because what you need to do, okay, when you're dealing with emotions, realize everything's about pain and pleasure. Okay, I talked about the meat thing, right? How, the reason I was able to change that because it was more painful to eat meat than to not eat meat, right? And it's the same thing that you have in your trading. And when you deal with emotions and when you deal with, strong emotions such as fear and anger, okay, those strong emotions, which you will have occasionally, but they can destroy your trading and really be the cause of unforced errors, okay? And when you have beliefs, and we talked about beliefs before, that are anchored with emotions that are extremely powerful, right? You gotta know how to deal with that. Okay, when you have beliefs that are anchored with really strong emotions that are powerful, they are, really dominating beliefs in your decision-making process. Okay, so you need to evaluate them as you go forward. Now, most traders feel that emotions are the most important thing in trading and the only thing that can affect trading, but that's not true, right? Thoughts, and the way we think about thoughts and emotions can play an important role as well, okay? And you really need to understand fear and anxiety. And your relationship to fear and anxiety, okay? Because fear, directly related to pain, okay, is a response to an actual threatening event. Now, the interesting thing, again, we talk about these brains, they can't distinguish between real fear or really more made up fear, right? Now, anxiety is a response to a possible threatening event. So if you go walk down a dark alleyway and somebody, is hiding in the corner and comes after you and you have to run away, there's a feared response, right? But if you say the next day you're walking through that same alleyway and you start getting tense and really tight, well, that's anxiety, right? It's a response to a possible threatening event. Trading for a lot of people, creates this anxiety, okay, and is the reason that a lot of traders have these unforced trading errors, because they don't know how to recognize this anxiety and they don't know how to deal with this anxiety. So you need to be able to recognize when you're going into this state, because one of the things we're going to talk about, you are like a peak performer, okay? Being a trader, first off, you're starting your own business, okay? You're like a peak performer. You have to be ready, okay? And you have to be trading in the proper state. We talked about that. So what we're going to do is, you can't get rid of fear. You can't get rid of anxiety. You can't get rid of emotions, right? You can't get rid of them. So, and you really can't manage or control them, but we're going to get to how to at least understand them. And that's what you got to do, right? You got to understand what is happening in your body when you're having anxiety. And that's where mindfulness comes into play. Being present to be able to be up top, like you're hovering above yourself, to see what is your response. And so next time you go, if you are trading, sit down, take a little notepad, take your journal, and write down, when you go into a trade, what's your breathing like? Everybody's got an Apple Watch now. See what happens to your heart rate when you get into a trade. See what happens. Do you have a narrow focus? Think about it. And write it down, because the more you know about yourself and when you get into that state, the more important it is for you to be able to, handle it and come up with a good plan. Okay, now, what I want to get into is going to be the fun part, okay? It's understanding heuristics and really understanding traders' mental blind spots, okay? And as we go through this, see if any of this stuff applies to you. And again, we gave you a book to read, Trade Mindfully, by Gary Payton. It's the Bible for what I want you to read. It's the Bible for what this class is built off of, and it's the Bible for what we give our traders before they step onto the trading floor. They have to have mastered this part of the process, and we do a bunch of simulations and stuff like that. So understand it. Make sure you read that book, because we're not going to be able to really even dig deep unless it's going to be a 10-hour course, and that's just not going to happen tonight, okay? So, but we are going to get into this. Another person that's really good at, and you get a lot of free stuff off of YouTube, is Dr. Brett Steelbarger. He's the one that he's really good. He's a good trader coach and a great person to listen to and follow. Okay, let's talk about heuristics. Let's talk about, traders' blind spots. What are we talking here? Because this is the key. When we say 90% mental, here's where all the potholes are for you as a trader. And you're going to see, man, this game isn't as easy as it looks. Now, there's certain mental boundaries that have evolved over, often, that is really, changed the way we think and really distorted the way we process and make decisions, okay? And this blind spot, typically is something you don't even realize is there, and these mental blind spots are called heuristics, okay? And, you don't even know they're there, and heuristics, it's a process of really your mind creating a mental shortcut, okay? It's an evolution thing that has been put together that you have created that helps you make a simple decision, okay? instead of a decision that takes, way drawn out, to really calculate and figure out. Okay, so it shortens the decision-making time and reduces the mental load. It's like your brain cheating, to make it easy on you, because you've got all these decisions going on through life. Now, if you were to ask my wife, whenever I try, I never have these shortcuts, because, if you didn't have these, you'd be like me. So even if you're trying to go and just buy a freaking phone, or if you're just trying to go and buy a printer, I got to spend like 10 hours researching the best freaking printer or the best freaking phone. I got to know all the different, the benefits, the weaknesses. It takes me forever, almost to the point where I can't even move. It takes me days just to buy a freaking, a pen. I don't think I have these shortcuts in me. Okay, but so what happens is, even let's say that they said it's a 30% chance to rain today, right? Well, you can sit there and create a shortcut. So your brain creates a shortcut and decides whether to take an umbrella or not take an umbrella, right? And whether it makes the right decision or not, who really knows, right? A lot of times it makes the wrong decision. But the key is you took a quick time to make that decision. You didn't have time to sit there, go on the computer, look up the weather, and figure out what the percent is in my area, whether it's really going to rain, and how the wind shear is, and whether the weatherman's wrong, and looking somebody else up. And you don't have time to make all these, do that kind of research for all these simple decisions, right? So it makes... it should be the opposite. A harder task, is really a substitute for an easier task. Okay, it helps us manage the world efficiently. Now, I'm going to give you a couple examples of this in action. So I want everybody to do this. Okay, write this down. I know these are complicated questions. Okay, here's the first one. A bat and a ball cost $1.10 in total. Now, the bat cost $1 more than the ball. So how much does the ball cost? Okay, how much does the ball cost? Write down. Okay, well, how many people said 10 cents? Okay, well, I can tell you the majority of really smart people will put that answer, will come right into your head, 10 cents. Some people will even argue with you. Mike, it's 10 cents, without a doubt. Well, no, it's not. Okay, it's actually 5 cents. Because if, the bat cost $1.05, then the ball costs 5 cents. That's $1 more, correct, than the 5 cents. So that's how much the ball costs. So if the bat cost $1 and the ball costs 10 cents, it's only 90 cents more. But your brain automatically jumped to that 10 cents. Interesting, isn't it? Let's do the next one. If it takes 5 machines to make 5 widgets in 5 minutes, how long would it take 100 machines to make 100 widgets? Okay, well, a lot of you jump right to it and say, oh, 500, 20. Well, if you answer 20, you're wrong. The answer is 5 minutes. Okay, and again, why? Because your brain has this shortcut, went right to exactly what looked like the easiest answer. So this is heuristics in action. And the interesting thing is, if you got it wrong, it's you're not in. It's not that you're stupid or that you don't have an intellect, because fewer than 50% of Harvard and Princeton students actually solve these problems correctly. Fewer than 50%. So some pretty smart people get these wrong as well, because everybody has these shortcuts and stuff like that. So what you got to realize in trading, so what works in the real world, right? Because it's not an issue of intelligence. We already talked about that. But what works in the real world may not exactly work in the trading world, where you got to be exact and you got to be able to maybe get a little bit more out of your intuitive mind into your more determined mind. And we're going to talk about that. So, the key is, through cultural norms and stuff, you've been prolonged to this exposure, and it happens all the time. And you have other types of biases. Okay, I'll give you another example, right? There's over 90 different types of biases. How many people have had this experience? Right? You're sitting in at the dinner table, and you say, you know what, hey, you tell your brother Tom, say, hey, can you go in the kitchen and get me the salt and pepper? And he's like, I don't want to get that salt and pepper. And it's like, no, just please, I can't, I'm sitting down, I've already got my plate, just give me the salt and pepper, right? And so he's all upset, and he's going over there, he's going to, God darn it, I gotta go get this salt and pepper, right? Opens the door, he says, where is it? It's right there in front of you. And he's looking, there's no salt and pepper, I can't find it, right? And you get up, and he's like, I gotta get up. And you walk over, and it's staring, and you say, what is this? It's the salt and pepper. And it was staring right in front of them, but they didn't see it. Why? Because it was their mindset, right, going over, and it was a mental block that they had. The salt and pepper was staring them right in the face, okay? But they didn't see it because, again, their mindset wasn't in the proper mode to see it. And we'll get more into that. Now, when we're talking about, heuristics, there's over 90 different types, okay? We're going to talk about 8 of them today, which are the common ones that you're going to find in trading that affect you on a daily basis, and you don't even know that they're affecting you. Okay, now trading deals with probabilities. We talked about this, right? Trading is about putting the odds in your favor. Are you always, can you, no matter how good you are you going to be able to be 100%, right? Are you always going to be able to pick winners and losers? No, I don't care how good you are. Trading is about putting the odds in your favor, right? And so that, you can create that successful plan. Okay, but the problem is the intuitive mind, which is the portion of the mind that deals with, these shortcuts, these heuristics, can't deal with probabilities very well. Okay, so the cognitive biases and the emotions, that you use, because you're using the intuitive mind, cause you to hold on to losers, take trades at the wrong time, jump into unplanned trades, use the wrong information to make trading decisions, and to overtrade. I'm going to show you how all of these basic mental errors that you make in trading are the cause of your own biases in the way you approach trading. And you don't even know that a lot of this stuff is even going on. Okay, so that's what's really important. So this is an important part because, if you don't realize it's going on, you can't fix it. And 90%, if you are able to get to an efficiency in your trading where, you are at 90%, where you're only making 10% errors, you're considered an elite super trader, right? And your returns would go through the roof. Most people are picking out good trades. Most people have a pretty good system in place. Most people can do this trading thing successful, but they can't deal and they don't understand this part. And so the errors and the losses that are happening are self-inflicted errors and losses. And a lot of people blow out accounts and drop out of trading because of some simple stuff that if they knew and had the education, was able to just do a couple tweaks and adjustments, they could probably become a really good long-term successful trader that pulls alpha from the market. Okay, so let's go into these different types of biases. Well, the first one I want to talk about is the representative heuristic, okay? This is a shortcut that looks for similarity between a current situation or event to its overall class to judge probability, okay? So, you're making assessments to not focus, okay, on the real question, but you're reflecting on the assumptions of that category. So there's a strong sense of resemblance between two things that can blind us to some other potential useful sources of information. Okay, so what's happening is, and I'll kind of put that into basic English here, and I'm going to give you an example. What's happening is, you're jumping, you're seeing possibly, like, I'm going to give you an example of a chart pattern. Okay, and you're saying, you know what? Wow, that's bullish. And so you're making a distinction based off that one piece of information, okay, that the other pieces of information is not needed. You don't need to ask the additional questions to get you to possibly dive a little bit deeper, because you're dealing with the intuitive mind. You're jumping to that conclusion right out of the gate. So let's use an example. Okay, an example in trading. You have a weekly bullish engulfing candle. Okay, and you're looking at this bullish engulfing candle, you're like, wow, look at this. And I actually have an example somewhere, but I'm gonna pull that up in a minute. Okay, and you know, a bullish engulfing candle looks bullish, right? It represents a bullish setup. So you don't look any further, you're like, boom, I'm right in. But however, so what happens is you're making that representation right there based off that one chart. Okay, but if you know, and as we get into trading and we get into setting up your plan, you need to use multiple time frames, top-down analysis down, to really establish your setups, to make sure that you have enough information to really have some confirmation that that's truly a bullish setup. Because if you would have looked at the monthly chart, what you'll see is that really you have a dark cloud cover that is after a long trend that is really showing distribution on the monthly chart and really should have been sold. Okay, so this is an example of a representation bias that you're going to see. And I got a chart in here. I apologize. I think some of the charts got a little mixed up, but it's somewhere in here, which I'll show you in a minute. And actually I'm gonna jump right to it. So here's the chart, right? You got a bullish engulfing pattern, right? This is the chart on the weekly chart. You know, it looks very bullish, right? Engulfing pattern is a pattern that pretty much is a green candle. You close at the highs. You basically, the whole body of that candle has engulfed the prior day's candle. Okay, looks like a very bullish setup. Okay, a lot of traders are going to be looking at and be ready to go bullish on that. But if you were to go to the monthly chart and the monthly setup, what you would find is something completely different. You find this distribution pattern now that looks like, okay, there's distribution happening. This looks like it's going down because you have what's called a dark cloud cover right there. So that's an example of a representative heuristic, okay, to look at. Now, the next one I want you to take a look at is the recency effect, okay? Now, the recency effect, I even get caught up in this one sometimes, okay? And I gotta watch it, okay? So the recency effect is pretty simple. More importance is placed on the most recent information that is received. So, for example, you know, let's say you took a setup and you took a trade and you had a loss, okay? Really sucks, right? Then all of a sudden, let's say maybe 10 minutes later, you get the same setup, okay? Well, what happens is, though, let's say you hesitate, all of a sudden you find yourself hesitating taking the trade, and you hesitate and you don't take the setup, and next thing you know, that stock takes off and goes and kills it, and you miss the trade. You ever have that happen? You ever wonder what was happening? Well, what's happening is you have the recency effect. So you put more of an importance on the trade before, then, now you had this fear or this feeling that, you know what, the trades aren't working today. Like they're interrelated, and it's not. It's kind of like the gambler's fallacy that, I wanted to bring up at the same time, right? Everybody knows, I like to use roulette as the good example, right? Everybody knows that each independent sequence is independent of the sequence before. And what that pretty much means is, they are independent. There is no representation. There is no link. So there's a particular pattern to the percentages as far as winning. And so what gamblers will typically do, they're looking for relationships, right? And so they'll sit down the roulette wheel, and all of a sudden they see 5 reds in a row where you had 5 red balls drop in a row. Okay, and so they start now putting more importance on the fact that there's a greater chance for a green ball to come up because it hasn't come up in a while, and that is not what the statistics say. That's not what a normal relationship is for this distribution pattern of what this return should be at this roulette table. So now they go all in on green because they're like, look, we had 5 reds. It's got to be the chances of a green's got to be higher. But we all know that is not true. Right? And so what happens is each roll is independent from the roll before. There is still the same number of odds of a green ball to a red ball popping up than it had, just because you had 5 red balls in a row places no difference in the odds of the next roll. And it's the same thing in the recency effect. The fact that you had a trade, okay, and it was a loss doesn't mean that this trade setup is not going to work, right? So you stop placing trades because now you're fearful because, oh my God, I don't get another loss. Okay, and it's the same thing. Let's say you're putting your research together and you're putting all this information. And so let's say that you really found the stock and you looked at the monthly chart, you looked at the weekly chart, you looked at the daily chart, right? You looked at the intraday, and it all is pointing to a short. Okay, it's all pointing to a short. But then all of a sudden you get into the intraday chart and you're in the pre-market and the stock is making new highs and it's breaking the high of the previous day on news. Okay, so now nothing really has changed in, let's say, your trade setup. It's still, you're going down the charts. It's still set up as a short. But now because you're seeing this stock go up in the pre-market, you're now thinking and have changed. And the next thing you know, the stock opens and you're long and the stock tanks because you have all this overhead supply. And so when the market opens, because most traders don't trade in the pre-market, so the retail traders, when the stock opens, this overhead supply starts dropping their shares into you, the buyers at the open, because they now have a chance to get out at a higher price than they could have before because they were so underwater. That's the whole philosophy you got to think about, right? But because the stock was going up in the pre-market, right, you all of a sudden placed more importance on that action than all the other action, that really all the other information. You place more importance on probably 2% of the information here and the other 98% of the information because you looked at it last night or you looked at it an hour ago, all of a sudden isn't as important because that's the recency effect. Okay, so again, you got to be careful. And I know, a lot of people go through that same thing. Now, another heuristic that's really interesting and really the source for a lot of traders having losses is what's called the loss aversion. Okay, and here you have traders that tend to avoid risks in domain of gains. I'm going to give you examples, okay? And then they tend to seek risk in domain of losses. Okay, and they're risk averse. Okay, so risk averse, they're less likely to take risks when you are gaining something. Okay, and they're more likely to take risks when they're losing something. Okay, so when you're talking about loss aversion, let's use an example. Okay, now we all know the key to a profitable trading system is you want to let your profits run and you want to cut your losses short. Okay, so let's say you were given, give an example of this loss aversion, right? Let's say that you're given a choice. You had a choice of a guaranteed $10 loss or a 50% chance of losing $20. What are most people going to do? They're going to take the 50% chance of losing $20. Right? Well, let's say you're giving a 100% chance of gaining $10 or a 50% chance of gaining $20, right? They're going to take the exact opposite. So what happens is, what this means is they tend to let their losses ride, right? So they want to stay away from the guaranteed loss. They can't handle losses. So they typically let their losses ride to bigger losses, and then they typically cut their profits short. okay? And so they cut their profits short and they're taking the 10 bucks instead of letting their profits run. And so they wind up doing the exact opposite, most traders, and that's a system that will never, ever work, okay? And then what happens is you have these choices to make, okay? And this is what you got to realize. When you're in trading, okay, you're making these choices of when to sell, when to buy, right? And a lot of these choices come down to a 50-50, okay? And, there's a chance that you make this choice and then when you look back on it later, you realized, wow, the outcome could have been a lot better, right? And so what happens is you experience this feeling of regret. But there's sometimes when you make a choice and the outcome was the correct choice and you look back on it, you're like, yes. And you have this sense of rejoice, okay? You're excited. Now, the key is as you emotionally get attached to this process and you have these regrets and these rejoices, what happens now when you start making these decisions on a consistent basis, now the anticipation of these feelings, regret and rejoice, start to affect your decisions. And most people focus on the wrong thing, on what would have been, right? How many people have gone back and looked at what would have been? Okay, and so that's something to really think about, okay? And remember we talked about pain and pleasure. What's rejoice and regret? Okay, it's pleasure and pain. It's the same thing. So when you're making these decisions on a daily basis, you're dealing with pain and pleasure consistently. And now, as part of your decision-making process, you don't even realize it, that you're already jumping ahead to the issue of that's affecting your decision-making process of the rejoice. And the confirmation bias is where you're seeking information. Okay, you're seeking information that will confirm beliefs you already have. And you're also going to seek confirmation in assumptions instead of disapproving it. Now, what that means, okay, what does that mean? It's where you're, I'll give you an example. Okay, so we tend to want to confirm you're using stochastics, right? And then you're also using another type of indicator, which is the commodity channel index, which measures the same thing. So why are you using the same indicator? Okay, why? Because it's for a confirmation bias. Okay, it's for a confirmation bias. So both indicators are giving a signal, so you think it's greater odds. Well, of course they're going to give the same signal. Why are they going to give the same signal? Because they're measuring the same stuff. Okay? So what successful traders do is they are, they're looking to not disprove, a trade rather than looking for confirmation. They're always looking to take the other side of the trade. And so you want to make a habit of doing that and not get caught up in this confirmation bias, because it could really be a bad thing. Now, if we go and move on, we talk about the effect heuristic. That is a heuristic or a bias that when you're typically feeling upbeat, you tend to expect positive results. And these feelings can dictate your focus and your expectancy. Okay? So, for example, you get into a trade and you let that trade run because of your feelings and based off of, how you're looking that day, right? Instead of based off principles in trading, and so you move your stop loss because you're feeling good, it's going to come back, and then next thing you know, that trade becomes an investment. Okay, that's the effect heuristic, and I can tell you, when you're dealing with moving stop losses and you're dealing in trading, the one emotion, the one feeling that you somehow got to grab control and you got to manage is that feeling of hope. Okay, hope needs to not be part of your trading. Okay, it's really important. Now, another one that we look at as far as biases is the hindsight bias. Okay, it's the "I knew it all along" effect. People view events after they have happened, and they think that it was a predictable event. And even though before it occurred, they really had no clue what was going to happen. Okay, we tend as traders have flawed memories of one's earlier opinion of a trade. And we have this belief that the outcome was certain to happen and it was foreseeable. Okay? See, there's a lot of ambiguity in trading. You can't predict the future. We always talk about put the odds in your favor. Okay? But when you look back, when traders typically look back, and this is where the internal dialogue comes in, and they're self-critical because they feel like they should have been able to predict that trade, when even though before the trade there's really no way of predicting it. Don't have that hindsight bias, okay? And so what happens is they kill themselves over the fact that they should have caught that move, and it's not based off of trading, real trading tools and principles. Okay, and so what happens is they try to make up for these missed profits by taking another trade and going maybe even larger, and it's a marginal trade and it doesn't work. Okay, so that's what they do. Now, I'm gonna give you some examples of what you should be doing versus what a lot of people do. And we go over this on our shows constantly, and we go through our trades constantly so people can see how it works. I wanted to give you a couple charts to show, how, not using hindsight bias, but how really, again, remember, it's about putting the odds in your favor, getting as much information as you can so to put those odds in your favor. Right? So when we go through it, and if people remember, well, we were looking at Fastly. Okay. Well, Fastly, way back, I forget when it was back in August. Okay. It was around earnings time. Fastly actually, they came out with some poor guidance right before earnings, and they dropped. They gapped down. Okay. And so, Fastly, when that happened, they dropped, and then they kept on dropping over the next couple days until they finally found a base. Well, we had the same situation come up again. Okay, Fastly came back out, and it was in October this time. And again, they pre-warned, and what happened to Fastly? They dropped. Okay, and we told everybody, look, we don't know what's going to happen. So this is not using hindsight bias. Okay, this is using putting the odds in your favor. We didn't know what was going to happen with Fastly. Okay, but what we could do using what we had at our disposal was let's see how the stock has reacted in a previous situation. And in the previous situation, when Fastly dropped down, if you were buying that first day, and I think it went up to like 96 that first day, well, you would have really been hurting because it dropped down to like 72. Okay, well, so in this situation, we advise people, wait a couple days, man. You don't want to be buying. And so that day, Fastly went up again to like $95, $96 a share, and people were buying. People in the marketplace were buying. Well, what happened from Fastly after that is that it dropped, and it kept on dropping, and this time it dropped down to 68. So if you were one of the ones buying at 92, it really wasn't working out for you. So again, did we predict this? No. What we did was we put the odds in our favor, and we said, okay, we don't want to buy this stock, even though we were positive on the stock at the time, because the last time this happened to the stock, that first day would have been really bad day to trade. Okay, and you would have been underwater just 3 days later. And the same thing happened, and it happened at even more of a dramatic effect, and Fastly dropped. So again, this is a way to use, a bias, and it's a way to use a system to really, accurately, get some information to put the odds in your favor. Now, I'll give you an example that we just used yesterday, a couple days ago. Okay, we had a situation about a week ago. Pfizer came out with some vaccine news. Kind of surprised the market. It was the beginning. I think it was the first week of November. Surprised the market on a Monday, and they came out with some really, really good vaccine news. So what did Pfizer do when they came out with that really good vaccine news? Well, it was a fundamentally changing story. The stock popped up, went up to a high of like 42.50. But then what did it do as we got to the market and into the day? It traded off, and the market itself traded off to where we finished near the lows for the day, and has continued to trade off. So just the other day, this Monday, we had the same kind of news. Moderna came out with their vaccine information. And again, we knew they were gapping up, okay? And we knew, okay, well, how are we going to trade this? Well, we already had a playbook. And our playbook was based off how the market handled the Pfizer news. Now, was it guaranteed to really, do the same thing? No. But does it help us put the odds in our favor on how to trade that? Yes. So what you're looking for a lot in trading is looking for relationships, okay? You're looking for how can you get this edge. So what do? And we have our trader mentor group. I shorted this in the pre-market. It was like 105 something that we shorted, and I covered, right at 102, right before the market opened. And then what happened when the market opened? We reshorted it again for an easy trade, and it was pretty much a low risk short, which got us like 3 trades out of it and a really bunch of alpha. And again, all we did was put the odds in our favor. We didn't fall in love with our thesis, so we let price action confirm. Okay, we made sure it dropped below the opening print. We had our rules. We made sure it dropped below VWAP. And if the price was to go the other direction, then it would have negated our thesis, and we would have gotten out. Okay, but by putting the odds in our favor, understanding relationships, it was able to give us a good playbook for to be able to trade that news. And again, it was putting the odds and giving us a low risk trade. Okay, so that's a way to not get caught up in hindsight bias. That's a way to actually do it the right way, understanding using your trading rules, and not having it happen and then go back and say, oh, I should have shorted that. It happened before, and thinking about it ahead of time. The last one we really want to talk about as far as the biases and stuff is the endowment effect. Okay, and the endowment effect is to overvalue a personal decision, a security that you're in, and ignoring the facts in your trading rules because you're in it. Okay, the mere fact that you're involved in this bias gives it more value. So you become emotionally attached to the story. So when we're talking about, I'll give you an example. Let's say that you bought Tesla, and you bought Tesla at $400 a share. And we all know Tesla is not a fundamental story. It's a storied stock, right? And so fundamentals go out the window. They just started making revenue, and they just started making it because they did some accounting tricks. Okay, but you did your research ahead of time before you bought Tesla, and you set your targets, and you found resistance at 495, and it was based off your technical and trading rules. But you become, let's say you're so enthralled with Tesla, you actually went out and bought one of the cars, right? So you love Tesla so much, you love the story so much, you're in one of the cars. So what happens? Let's say 2 days later, the stock gets some short-term news and goes parabolic and reaches 480 in a couple of days. Well, you as a trader know that when a stock goes a little too far too fast, you take your profits. But what happens with this endowment effect, because you're in love with the story, because you are emotionally attached, the trader, you as a trader, you use this information as an excuse. Well, 495 is my target, and I think it's going farther. And then what happens? The stock falls back and goes back down to like 425. And then you're left hoping and wanting and waiting for it to go back to 495 or 480 even, and it doesn't go there. So that's the example of the endowment effect. right? And so, you got to look at stuff like that, and you can't fall in love with your trades. Remember, we went over the 6, that's why we went through the 6 human needs, right? You can't fall in love. You got to watch your emotions, and it's got to be based off of, solid trading rules. Okay. Now there is another bias out there. It's called the optimism bias. I didn't really put it on here, but I wanted to bring it up anyhow. And that's really where you believe yourself, because let's say you're in a rhythm and you're really optimistic, that you are less likely to experience a negative event, right? And this is where we talk about understanding your state when you're trading, understanding your emotions. And sometimes even having positive emotions could be a negative, right? And so what happens is, you think, man, you're so much into this stock, you're so much into this setup, so you just ignore your position sizing and your risk size, right? And your risk rules, and you just pile into a stock with all the money that you have, right? Even though that's not what your trading plan says. Well, that's an optimism bias, and you got to be careful as far as that's concerned too. So the question is, we have all these trading biases, right? And we have, all of these psychological issues dealing with emotions and trading, and whether, having an effect, and creating these mental mistakes. Well, let's start talking about some solutions, okay? See, to achieve success in trading, you need to have a sound process, right? That helps you to continuously develop. And again, we talked about the formula, 90% mental. It's not about the holy grail of finding the right trades. It's about how you trade it. It's how the emotions affect your trading. So what you need to start to develop is emotional intelligence, okay? Emotional intelligence is just as important as an IQ. So to me, if you go back to that formula, right? We go back to that formula, 90% mental. Well, that's emotional intelligence. So 90% emotional intelligence, 10% IQ, which is technical. Okay? So what's emotional intelligence? It's recognizing and accessing the emotions in both oneself and others. Understanding emotions not only helps you with your trades, it helps you recognize and analyze market movements. When we teach you charts next week, we're not going to teach you charts like everybody else teach you charts. Okay, we're going to teach you how to draw lines, but we're going to teach you how to understand what is a chart really showing you. Okay? What's it showing you? It's showing you the organization of where the emotions of market participants are now. Okay, so when we talk about emotional intelligence, I'm not just talking about emotional intelligence in yourself, right? It's emotional intelligence on how to analyze how, stock prices are moving, what's happening in the marketplace, what's the emotions behind price movements. It's not, you have nothing but other tradition. And on the other side of the trade is another person. Okay? There's another person. And how many people, before they took a trade, sat down and tried to figure out, well, why is that person taking the other side? If I'm buying, why is that person selling? How many people have actually thought about that? Not many, right? So, because, we have this bias that we're always right and that we know all, we got this ego, and nobody thinks about, stop with the confirmation bias and start thinking about, well, what's the other side thinking about? Okay? And so emotional intelligence is that as well in your trading. And so you're going to integrate the information that is expressed by emotions in your decision making. So you're going to understand, you need to understand the meaning of your emotions. You must be open to feelings and emotions, because we talked about it before. You cannot you cannot trade emotion free. Can't happen. Okay? I don't care who you are. You can't get rid and trade without emotions. Okay? You have a hard time, a lot of people, controlling emotions. But what you can do is you can understand them. You can manage them from a standpoint of how they affect your decision making. And that's where mindfulness comes in, to being top down and being open to what is this emotion and how does it affect my trading and how is it affecting my decision making process. And how one responds to these emotions as they rise, as they come about, is really what emotional intelligence is about. It's not the emotions that come into play, it's how you react to the emotions. Now, I want to break down and clarify, some unconstructive emotions, okay? See, emotional intelligence investors will recognize when they're trading, when they're having certain emotions. And that's the key, what you need to do. You need to understand the process when you're having these emotions and to be able to understand how to react to them. So you need to use emotions in your favor in the decision-making process. Now remember the internal dialogue. Be careful. Don't be overcritical when you're going through and talking about yourself, right? You got to be careful because you have we talked about the intuitive mind. Okay, the intuitive mind is the portion of the mind that really is trying to create these shortcuts. And it's not the portion of the mind that really wants to dive into some deep analysis. You need to intentionally engage the deliberate mind and to focus on the information at hand and what is key. Right? And so what you need to do in part of this process is create that competing analysis that's the way you give yourself that confirmation. So, when you're talking about emotions, right, you need to think about, okay, number one, what kind of state am I getting into? Right? What kind of state am I getting into? Because it becomes part of this process. Am I getting nervous? Okay. Is my heart racing and stuff like that? And when I talk about the self-dialogue and being super critical, you got to be careful. I use the example all the time. People try to lose weight, right? Why do people, try to lose weight and then eventually, next thing you know, they're eating their butt off and they forgot they were trying to lose weight. How does that process happen? Well, what happens is, because we're human beings, people usually get some momentum and go and start losing weight. And then because they're a human being, they actually slip up and they eat something they weren't supposed to eat. Wow. You're a human being. You're not perfect. But you, in your infinite wisdom, in your internal dialogue, what do? Well, you start beating yourself up. You fat, you know what? Man, you're so fat, you're so lack of will, you can't even not eat a donut that was sitting there. You wind up having this internal dialogue that's so critical that it sends you right over the edge and you just give up. When really all that was happening is that you are human and you made a mistake. And it's the same thing in trading, right? All of a sudden you have a loss. You make a bad trade. Man, we all do it. I still do it. Right? And you make a dumb, I got out, man. I let emotions get to me. And then all of a sudden, you got this internal dialogue. It's like, man, you dumb trader. You're not any good at this stuff. Why are you trading? Let somebody else trade. You suck. Right? And so you constantly have this internal dialogue that beats yourself up. Next thing you know, you're in a spiral. So don't be super critical. And so the key is you need to clarify, what are the signs of fear? What's the signs of the emotions? And, we need to put ourselves in a position of success so you can recognize it. So you need to sit down, take a journal with you when you do a trade, or sit down and think about, right? First off, what's my relationship to fear and greed? Okay, everybody has a relationship to fear and greed. You need to sit down and figure out what your relationship, just like I said, you need to sit down and figure out what your beliefs and your relationship to money is. Well, you need to sit down and figure out what your beliefs and your relationship to fear and greed is. Okay, you need to do that. Then you also need to sit down with a journal. You need to start journaling while you're, going through a decision-making process. If you're not trading yet, sit down and journal. When you actually sit down and let's say you're making a decision with your wife about your kids or something like that, sit down and, journal after you're done going through that process. Well, what just happened? What was my, experiences like? What was my focus? What was my blood pressure like, right? And if you are trading, sit down and think, okay, man, whew, write down what your, take the time. Don't trade as much that day, and just so you can sit down and write down, you took a trade, what were you feeling, what you were thinking. The best way to do this too is to sit down and record yourself, right? You got an iPhone, set it up on a nice little tripod or something, and record yourself trading. Make a verbal journal to yourself as you're recording, so you can talk about what your emotions are, what you're feeling, what your breathing's like. The more you can get and understand what is going on when you're trading, the more quickly you can understand how, when a certain emotions pop up, then that's really important. And you also got to we talked about it. Remember, we talked about getting in the right state when you first sit down and trade, and having that anchor to get you in that right state. Because you got to realize you're going to have stress in trading. Okay, you have the FFR, the fight flight response, right? Where it's hardwired into us. So you're not getting rid of that at any time, right? But we're unique in that a threat doesn't have to be real to elicit a response. Realize that. So, understand what's going on. And this is why self-discipline is so hard. Because every time that you are doing something and it's involved with an emotion, your brain is creating a neural pathway, okay? It's making a connection from one part of the brain to the other. Okay, so when you go and you try to lose weight, let's use that as an example. Okay, and then you go and break that, and you eat wrong, right? And then you screw up, and next thing you know, you're creating a neural pathway that is really, creating a strong response. And so when you constantly make the same decisions and the same responses over and over again, and when you do it with a strong emotion attached, what happens is you constantly are creating these stronger and stronger pathways, and it now starts to become harder and harder. So what happens is you are really negatively affecting how you are wiring your brain, and so your brain is constantly trying to make things stronger. And so that's why discipline is so hard. Right? Discipline is so hard because, really, I told you, to be good at discipline is to do what you say you're going to do. Every time you do what you say you're going to do, you create that pathway, and it gets stronger every time. So every time you do it over and over, it's like building a muscle, right? If you go to the gym and you lift muscles and you put stress on your muscles, what happens? They break down and they grow back stronger. They get stronger. They rebuild stronger, right? And if you continuously go over and over to the gym, they get stronger, 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 and you see growth, right? Well, it's the same way. What happens if you go to the gym and you stop? Well, it builds that pathway, and then you stop, and it stops building it, right? And then you just get weaker and break down, break down, break down. So you can't go to the gym once and expect to have strong muscles and to have a nice pathway there built, right? It's the same thing with discipline. You can't expect to say, I'm getting up at 6 o'clock in the morning, and then 6 o'clock comes, you hit the snooze button, you go back to bed. Because what you just done is you create a neural pathway that made a connection in your brain that says you suck, right? And every time you do that, that gets stronger and stronger. So every time that happens, you all of a sudden are finding yourself, you're not even thinking about that snooze button. You're not even setting the alarm anymore, because now it's such a strong pathway that you're making it harder and harder to actually get it right. And it's the same thing in trading, right? It's the same thing. So when you start doing the same things over and over again, what you're doing is, it's called negative reinforcement. Okay, and when you add a strong emotion to a really, a bad habit or something like that, it really starts to stick. Okay, so when you're reviewing your trades, you need to also review not just the technical side of things, right? You need to review the emotional responses that you're having in trading. okay? Because they are guiding you, and they are the reason for 90% of your trading mistakes, okay? See, what people don't realize is that, emotions are part of your decision-making process, right? And so if you are having erratic trading behavior, you got to realize that you're doing some things wrong. You're probably letting emotions come in, but you also got to realize and not see it worse than it is. Okay, even the best traders are uncomfortable in trading. It's okay to be uncomfortable. It's normal, right? When you're trading, you're never going to be a perfect trader, and you can't compare yourself to others. You're always going to have doubts and worries and stress. But you can have doubts and worries and stress and still make good money in trading, right? You're always going to have fear and anxiety. You're a human, right? You're going to have those emotions. The key is how you handle them, how you react to them, how you recognize them, okay? It's the process that you create for identifying these emotional responses. And when you recognize when you're experiencing this stress, you need to recognize it before you get overwhelmed by it and it consumes you, okay? That's the key. See, there's 3 principal trading fears. There's the trading fear of being wrong, okay? Now, a lot of this stuff is all coming together, right? You can't, we have this need for being right, okay? You need to separate your ego from trading and accept you're going to be wrong, and you're probably going to be wrong more than you're right. And until you understand that, come on, man, it's just like business. I can't stand it, man. People are so afraid of failure, okay? That is the number one thing in life you have to get over. Get over it, okay? Because I'm sorry, the only people that worry about failure and care about failure are failures, okay? Successful people, they don't care about failure. Matter of fact, a lot of them get excited about failure. Okay, if you go and show me any successful person out there, any successful trader, you are showing me somebody that has failed more than they have succeeded. Okay, I mean, Colonel Sanders, created the recipe for KFC. I mean, he was in his 60s when he finally was successful. Okay, I don't care how old you are. I don't care how young you are. It has nothing to do with that, right? Show me, I hear, Donald Trump, he declared bankruptcy several times. So most people have declared bankruptcy that have been successful, okay? Only people who care about crap like that are failures that don't understand the process, right? So you can't play the game if you don't get in the game. And, when you're talking about trading and you're talking about, if you're worried about being wrong, then, you got to handle that right now, because you got to accept that you're going to be wrong more than you're right. And you got to accept that that's where you learn. Failure is exciting because that's where you're actually getting a lesson. You don't learn a lot from your successes, but you learn a boatload from your losses. Okay? You also have a trading fear of losing money. Loss aversion, if you really look at it, traders, human beings are not really built to be traders, okay? We're just not genetically built for it, man. I mean, because our mind, is just so all over the place, and a lot of people can't handle losses. We're so trained the other way. Hold on your money, don't lose money. This stuff. I see people picking up a penny off the street, right? If they saw what I was losing in a trade, at any moment, they probably freak out, right? So, trading fears losing money, and you got to deal with the issue of losing money. You're going to lose money. If you can't handle losing money, don't be in trading. Sorry, get out. Okay. And then finally, you got the trading fear of missing out, and that's FOMO, right? And emotions driving trading when you have FOMO. That's all an emotional event. If you all of a sudden see a trade that's getting away from you, and this even happens to me today. I had one today, actually. It was Walmart, right? I actually, Walmart started to get away from me. I was just getting ready to hit the button, and next thing I know, Walmart's up like, it's already up 30 cents from where I wanted to get in. And I have one major rule that is I follow all the time. I have two major rules that's important to me, that helps me deal with emotions. One is we never chase. And we do that as a whole for the fund. We do not chase. There is always another trade that's going to come around. Nothing ever good comes from chasing. Okay, so there's the issue. That rule keeps me out of a lot of bad trades. And I don't go back and look, oh, if I would have got in, I still would have made money. That's a loser mentality. Another rule I have, if I'm down big and I'm close to my stop loss and the market gives me a gift, I always take it. I always take the gifts that the market gives me. And that's a fundamental rule I have. And it's the same thing when I was using the Tesla example. Even though my target was 495 from a resistance point, if the market in 2 days gives me 80 points, I'm taking that gift. Okay? And I don't care what happens from that point forward. Okay? Take the gifts that the market gives you. So, getting back to, how we're going to deal with this stuff, you got to understand there is a direct link from your trading behavior to your emotional state. Okay? And remember when you sit down for trading, there's a couple things most people will not tell you to do. Okay? The first thing that you need to do is you need to sit down at least 15 minutes prior, and you need to take about 5 to 10 minutes, and you need to visualize your trading. Okay? Visualize all different types of possibilities. Visualize your trading ahead of time. Okay? Then the other thing you need to do, and we talked about this, is you need to get yourself in a peak state. Right? You gotta, boom, you gotta have that anchor, whatever it is, that automatically, boom, you do, it gets you into a peak state. And you are at the emotionally top, ready to go. You are using, mindfulness. You're ready. You're ready for everything. You know how to handle your emotional state. You're in that peak state because, just like a performance athlete, right? If you're kind of hanging down in your mountain and you're just depressed, you just woke up, you're tired, is that a good state to be in to trade? Is that a good state to be able to react at a quick basis in a quick fashion that you got to do a trading? No. It's just like a performance athlete. So if you're not doing that, you're doing it wrong. Okay? Understand what is it? What is a peak state? How do you get there? Okay? Anchor yourself. Energy and mindset are important for performance. You must understand that. And then what you got to do is you got to understand your decision-making process, okay? And understand emotions are going to be a part of it. And experiences, past experiences are going to be a part of it. Matter of fact, past experiences that have emotions attached to it are even stronger part of your decision-making process. And understand that. And we talked about pain and pleasure, regret and rejoice. Those experiences and what you expect you could get are part of your decision-making process. Your heuristics, your short path, your intuitive shortcuts that you need to keep out of trading are going to be they're going to be there, and they're going to be you're going to try to wiggle in to be part of your decision-making process, right? And emotions are going to be a part, like we said, okay? And you got to be careful because we talked about negative reinforcement, and you don't want to negatively reinforce a bad trading habit. Okay? That's so important. Think about it. How many people have had a baby, right? And so an example of this is, the baby starts crying. What do all new parents do? They go rush in and they pick up the baby, right? And they hug around and, give it something, put it on the teat, whatever they're doing, right? And, and then the baby's better, right? And then you put the baby down and a little later it starts crying again. Well, if you pick up the freaking baby every time, okay, that it cries, it's never going to learn to self-soothe, and you are basically reinforcing this baby that you are going to give it pleasure, and it's not going to stop crying until you freaking pick the thing up. Okay? So that's an example of negative reinforcement. And we do the same thing over and over again in trading, and you don't even realize it. So cut it out. Don't do that. Okay? Other factors. Okay, experience is really one of the solutions, okay, or going to be one of the solutions if you go through and create a good process. Experience tends to help weed out a lot of these biases. But you got to be aware of them, and you got to be aware of your emotions, and you got to put time and effort into it. They're not just going to go away, right? And you got to understand you're never going to get rid of fear. Okay, and suppression, not trading, is not a good thing either. Now, I'm not saying that there's not periods of time where, you know what, if you're kind of off kilter, not trading may be a good thing. But not trading because of an emotion is not a good habit to have, right? And exercise is, believe it or not, is another important tool to help you, because it's going to help you relieve stress. Okay, so make sure, a lot of good traders I know, they exercise. They exercise in the morning, they exercise after the market. You got to work off the stress, because it's not, you can't avoid it. It's going to be there. You got to deal with it. You can't suppress it. So the goal is to keep you, through mindfulness, to focus on high value actions of trading, the high value of what is the true trading, my trading plan, what is it, while having these emotional reactions, and understanding and seeing them. Okay. And, meditation. You want to get good at this stuff? Meditate. Okay, start off, there was a study. First off, there's I think it was a Harvard study. They took like 60 people, and they had them meditate every day over, and I think I think it was a 6-week period of time. And they found that, they had them meditate 27 minutes a day, and they studied their brains every day, and what they found was amazing. Meditation increases your gray matter throughout your brain. It will reduce your blood pressure. It is the key to understanding and controlling your thoughts, not eliminating, but controlling, and to controlling your emotions. If you start meditating, it will change, and truly meditate, it will change forever, how you react and deal with trade management. And meditation, it's got, it makes you younger, man. It protects from cognitive declines. And it's the most important thing that you can do. And what I would do, and what I recommend, is start this week 5 minutes a day. Okay? 5 minutes a day, sit down in a chair that has a nice straight back, be in a nice comfortable position, but erect position. Okay? Have your feet flat on the ground, or you could have a meditation pillow that you're sitting on. But the key is have good posture. Okay, rest your hands on your legs. Okay, pretend that you're holding 2 butterflies. Okay, that's the way I've always been taught. Pinch your thumb and your fourth finger together like you're holding 2 butterflies, and you're just not letting them fly away. And just sit there, close your eyes, and set an alarm for 5 minutes. Okay, and take deep diaphragmatic breaths. Breathe in. When you breathe in, your belly should expand. And then when you breathe out, your belly should contract. Okay, so put your hand on your belly and make sure you're doing deep diaphragmatic breaths. And then as you're doing this, focus with your eyes closed on your breathing. Focus on the breath going in, focus on the breath going out. Okay, and you will have some thoughts pop into your brain. Okay, recognize those thoughts. Don't get mad. You may even find yourself reciting a movie you watched last night and realize the last 3 minutes you've just been thinking about that movie or thinking about a meeting you have. Don't beat yourself up. Just realize that's what you've been doing, because as you keep on doing this, that's going to get better and better. You're going to be able to control that, right? As a thought comes in, recognize it, release it. Okay, that's the start. It's really easy. That's all meditation is. That's the start. And then, I'll get you some courses, some free courses that you can get. I'll post them, and you can, start doing mantras and stuff like that. But really, if you do that, do it 5 minutes a day this week. Next week, increase that to 10 minutes. The following week, I want you to increase it to 20 minutes. And then the 4th week, I want you to increase it to 30 minutes. You should be doing 30 minutes a day of just sitting in silence, doing meditation. It will change your health. It'll change your trading. It'll get you control of your emotions. Other things I want you to do, I want you, to have, okay? I want you to have your journal. You should have your mental journal. So now if we look at this, up to this point, where we are as a trader, you should have your daily schedule. Okay, you have a daily schedule you follow. You have a discipline plan. You have a discipline schedule that you should be following. Okay, and again, if one day you have something that you don't follow, then don't beat yourself up about it. Don't be overcritical. Get right back on the plan. Okay, if it's okay with discipline if you intentionally ahead of time decide to change something. That's not a miss. Right? Be intentional. That's all discipline is being intentional in your actions, not being emotionally driven. Okay? You should have your emotional journal. Okay? And you should be writing every day in your journal, understanding your emotions. And if you're trading, you should be understanding your responses, trying to recognize and trying to find your biases, trying to find how you deal with stress, how you deal with fear, and how you deal with greed, okay? And you should have and start creating a review and self-assessment process that you do every day. And so when you review your trades, you're not going to just look at the technical side and mechanics of a trade. You're going to look at the mental performance of your trades and any distinctions that you're making. And your trading plan is your key. Okay, because the key to a lot of this is preparation. The trading plan is your preparation, and it's going to take the stress out. Okay, and you're going to work and use your trading plan. And remember, it's a living document. You're going to take from all your reviews and your journals, and you're going to take and make distinctions. And again, keep it simple and stupid. It doesn't have to be complex. Okay, it doesn't have to be something that is, bogging you down and it's just a hard thing to do. I know we went a long time today, but, this stuff is important and you should have all this already started. If you need help, drop us a note at info@vanttrading.com. We'll send you out some examples. We'll answer emails. We'll help you. We want to see you successful. Okay, and to be successful, this is an important part of the process. So make sure you keep the momentum up. If you've missed something along the way in these 6 classes, go back this week, hit it up. Get yourself caught up, and don't beat yourself up. You want to keep the momentum going. That's the key, man. Momentum. Once you get momentum, it will carry over to every other part of your life. And, as you can see, this trading thing is, it's a big deal. Okay? It's not something that's really easy and just sitting down and making trades because, most people are just, lack of a better word, fucked up. Okay? It's okay. You screwed yourself up. Your parents screwed you up. Whatever excuse you want to use, it doesn't matter. Okay? The key is you can't take and bring external baggage to the trading floor with you. Okay? You got to be in a peak state. You got to understand yourself to the T. You got to have all the processes set up that we're helping you set up along the way. And you got to have a trading plan that's going to make you prepared. If you do all this, you will be a machine and you will experience what very few people can experience. And that's pulling alpha and having from the market on a consistent basis and being consistently profitable and having and knowing yourself and enjoying life and having the freedom of whatever it is that you desire. So safe trading out there. I'm glad you could be a part of this, and I'm looking forward to tomorrow because we got another important day. I told you this week's going to be tough, man. We got a lot of stuff to go through and a lot of stuff that's really just risk management, man. We're going to risk management tomorrow, so let's get it going.